Hi everyone. Today our group will present an assessment for the cost financial accounting with the topic conceptual framework. For this project, we are using an example company called Zahara Training STN BHD, which sell accessories, mainly handbags. The e-commerce platform used by this company is Lazada. Hi everyone, my name is Victoria Sia Mei Ting. My matrix number 20DSC 25F1080. I'm from DSC 1B.
My name is Josepin Busak Henry. My matric number is 20 DSC 25F1064 and I'm from class DSC 1B.
Hi everyone, my name is Hareeshini A Selvadurai, 20 DSC 25F1052, which is my number matrix, and I'm from DSC 1B.
As an introduction, the conceptual framework is used to guide the preparation and presentation of financial statements. It acts like a foundation or a set of rules that accountants and companies follow when recording and reporting financial information. This framework is very important because it ensures that the financial information report is relevant, reliable, and understandable to users such as investors, creditors, and even the management of the company itself, which account at consistent information. This user can make better decisions about the company. In this presentation, we will focus on three main qualitative characteristics of useful financial information, which are relevance, faithful presentation, and comparability. These characteristics are what make financial reports not only informative but also meaningful and trustworthy for everyone who uses them. By following the framework, companies are able to produce reports that can be trusted and compared across different periods or even between different businesses. This is very important because investors, creditors, and other stakeholders rely on this report to make decisions. The key qualitative characteristics highlighted in the framework are three main points. First, relevance, which ensures the information is useful for decision making. Second, faithful representation, which means the information must reflect the true situation of the company. And third, comparability, which allows users to analyze performance across time and against other companies. Relevance means that financial information must have both predictive value and confirmatory value. Predictive value allows users to make forecasts about the company's future performance, while confirmatory value helps them check or confirm whether previous predictions were correct. For example, sales reports of handbags from Zahara Training show not only show the number of items sold, but also highlights patterns or trends such as seasonal demand or customer preferences. This type of information helps the company predict future sales and plan their inventory or marketing strategies. Relevant information is therefore very useful for both management and investors. For management, it supports better decision making for operation and planning. For investors, it provides insight into whether the company is likely to generate good returns in the future. The next characteristic is faithful representation. This means that financial information must be complete, neutral, and free from error. Completeness means all important details are included. Neutrality means the information is not biased and free from error. Means it is accurate. For example, if Zahara Training offers refunds for detective handbags, revenue should only be recognized after the return period ends or adjusted for expected returns. Delivery costs must also be recorded as expensive and not hidden in revenue. By inserting faithful representation, financial statements give a true and fair view of the company's conditions, which helps build trust among users. The last characteristic is comparability. Financial information should be consistent and compare over time and also across different companies. This consistency allows users to identify trends and evaluate performance more effectively. For example, if Zahara Training records sales through Lazada, it should apply the same accounting methods every year. If the company keeps changing methods, it will be difficult for users to see whether sales are truly improving or declining. Comparability also means that investors can compare Zahara Training with other businesses in the same industry. When companies follow similar accounting standards, it's become easier to judge which business is performing better. In short, comparability helps users make fair and accurate evaluation by ensuring the information is present in a way that is consistent and aligned with other.
In this slide, I will talk about the other enhancing characteristic. So, financial reporting must follow the certain enhancing characteristic. So, firstly is the variability. All transactions should be supported by records such as Lazada, invoices, courier invoices, and the receipt. Second is the timeliness. Sales and costs need to be reported promptly at the end of each accounting period. Thirdly is the understandability. The financial statement must be clear enough for director and investor to make an informed decision. In this slide, I will talk about the revenue recognitions before e-commerce. In this traditional retail model, revenue was recognized immediately when a customer made a purchase or made any buy of the things. Just for an example, a customer buy a handbags in a store and they pay the items at the cashier on the spot, and they have collect the items from the cashiers. So in this, we can know there was no delivery cost involved because the customer took the product directly and they don't have to pay any of the extra charges from the shopping. In this slide, I will talk about the revenue recognitions before e-commerce. In this traditional retail model, revenue was recognized immediately when a customer made a purchase or made any buy of the things. Just for an example, a customer buy a handbag Hi, in this slide, I will talk about the revenue recognition after e-commerce. With the e-commerce platform like Lazada, Shopee, and etc., the process is totally different. For an example, the customer place an order and make the payment online through the online shoppings. The seller prepares the items and they have arranged for the courier shipments. So just for the revenue is the recognized only when the customers receive the product that they bought from the online, which is represent the transfer of the control. Meanwhile, delivery costs are treated as a selling expenses, not deducted directly from the revenue. Hi, in this slide, I will talk about the revenue recognition after e-commerce. With the e-commerce platform like Lazada, Shopee, and etc., the process is total. In this slide, I will talk about the revenue recognition timeless, which is the product of the handbag. So, this slide illustration the changes in revenue recognition before and after Zahara start using the Lazada apps. So, like previously under the traditional retail model, the process was so simple. Just like the customer order and pay in store and the revenue was recognized immediately. But with this Lazada app, the timeline shift is the difference. The customer order on January, just for an example, the customer order on January 10, but Zahara only recognized the revenue after delivery is confirmed on January 15. It may took like 5 days, and the payment is released by the Lazada on January 16. So this delay is very important. It means Zahara can no longer recognize revenue at the point of order or the shipment, but only after the delivery confirmed and the platform settled. This ensure compliance with the revenue recognitions and the standard in e-commerce settings. Now let's look how the delivery costs and treat differently before and after Zahara adopts the e-commerce. So in the past there was no delivery costs charges. Customer collect the item directly from the cost, but now with the courier service involved, Zahara need to account for this cost probably. If Zahara pay for delivery, it will record as a selling and distribution expenses. But if the customers pay a delivery separately, it must be recorded as a both revenue and expenses. These distinctions are important because the effect of the Zahara Group margin and financial transparency. It will accurate the classification. The accurate of the classification help user of the financial statements and understand the true cost of fulfilling of the online orders. This timeline shows when the delivery costs are recognized from the online sales. On January 10, Zahara prepared the handbag for the delivery for the customers. Then on January 11, the courier picked up the item from the Zahara. So this is when the Zahara incurs the delivery cost and it must be recorded as an expenses at the point. So from January 12 to January 15, the parcel is in the transit for the customers. So even though the customer hasn't received yet, the cost is already recognized in the accounts. So finally, the customers already have received the items on the January 15.
In this slide, we can see the key problem faced by Zahara Trading. First, management is unsure about the correct reporting method for online sales. This creates the risk of misleading user of the financial statements. For example, if revenue is recognized too early, it may show overstated profit, which does not reflect the true financial position of the company. In this slide, we can see the key problem faced by Zahara Trading. First, management is unsure about the correct reporting method for online sales. This creates the risk of misleading user of the financial statement. We provide a recommendation to ensure accurate reporting. For revenue recognition, the company must apply MFRS 15 or IFRS 15. Revenue should only be recognized when the control of the handbag is transferred to the customer, usually at delivery. Lazada commission must be recorded separately as a selling expense. For delivery costs, courier or shipping fee should be recognized as expenses when incurred. If the company charges customer for delivery, this must be shown as a separate revenue line. Finally, clear notes and disclosure must be included in the financial statement so that user can understand the changes in revenue and delivery cost policies. Our advice for Zahara Trading is to establish a clear accounting policies for Lazada sales. We must ensure that revenue and costs are relevant, faithfully represented, and comparable from year to year. We also recommend providing training for accounting staff on e-commerce transactions and regularly reviewing compliance with accounting standards such as MFRS and IFRS. In conclusion, the conceptual framework is ensure the financial information are useful, reliable, and comparable. By applying the principle of relevance, faithful representations, and comparability, companies like Zahara Trading can present Lazada sales and delivery costs more accurately and fairly. That concludes our presentation. Thank you for listening, and we hope our recommendation will help Zahara Trading improve their financial reporting in the future. Thank you.